Welcome, everyone, to another episode of Accounting Recounted. I'm your host, Amanda Hendren, and today we're diving into a topic that has been making waves in the corporate world. That is the growing importance of ESG reporting in corporate accounting. ESG stands for Environmental, Social, and Governance and has become a buzzword in recent years as businesses increasingly recognize the need to go beyond just financial metrics to assess their overall performance. In this episode, we'll explore how companies are incorporating ESG factors into their financial reporting, the challenges and benefits that are associated with this integration, and the crucial role accountants play in ensuring accurate and transparent ESG reporting. To kick things off, let's discuss the start of ESG reporting. Environmental, social, and governance factors represent the three pillars that are measures of a company's sustainability and ethical impact. So, traditionally, as we know, financial reports focused primarily on monetary performance, but the landscape is evolving. Investors, regulators, and stakeholders are now demanding a more comprehensive view of a company's overall health and impact on the world. Investors, in particular, are becoming increasingly conscious of the long-term risks associated with climate change, social inequality, and corporate governance issues. As a result, of course, there's a growing realization that incorporating ESG factors into your financial reporting provides a more holistic understanding of a company's resilience and potential for long-term success. So, how are businesses adapting to this shift? I mean, that's huge. Think about it. Beforehand, all people really cared about were the numbers, and now there's all these other things that you have to incorporate into your reporting to give people a true idea of how your company is performing. Companies are now recognizing the importance of not only being financially profitable, but also being socially responsible and environmentally sustainable. Incorporating ESG criteria into your financial statements has become a strategic imperative for many organizations. First, ESG reporting allows businesses to demonstrate their commitment to sustainable practices and social responsibility. Of course, this in turn can attract socially conscious investors and consumers, giving companies a competitive edge in the market. Secondly, regulatory bodies are beginning to mandate ESG disclosures. It's becoming mandated, guys, further driving businesses to adopt these reporting standards. So it's not always just if you want to do it. It's becoming a thing that is now mandated. Compliance with ESG criteria is becoming a regulatory requirement in many jurisdictions, and non-compliance can have a significant legal and reputational consequence. So, what are the challenges of this integration? While the benefits of ESG reporting are clear, the integration process is not without its challenges, as you should suspect. One major hurdle is, of course, the lack of standardized metrics and reporting frameworks for this reporting. Of course, it's new. Unlike financial reporting, which follows well-established accounting principles, ESG reporting lacks a universally accepted set of standards, right? So this lack of consistency makes it more challenging for investors and stakeholders to compare and evaluate companies on a level playing field. Additionally, collecting accurate and relevant data for ESG reporting is pretty complex process, right? It's not just numbers. It's a lot of different factors that need to be, considered. So companies need to implement robust data collection processes to track and measure this type of performance across environmental, social, and governance parameters. This requires a significant investment in technology and data management systems, which, of course, presents a barrier for smaller businesses without these resources. Okay, I know it's complex and hard to implement, but let's talk about the benefits of integrating this criteria into your financial statements. Beyond meeting regulatory requirements and attracting socially conscious investors, Companies that embrace ESG reporting often experience enhanced risk management, right? So, by assessing and disclosing environmental and social risks, businesses can actually proactively address potential challenges before they escalate, which mitigates financial and reputational damage down the line. Furthermore, ESG reporting fosters transparency and accountability, which people love that, right? Companies that openly communicate their ESG initiatives and performance easily build trust with stakeholders, which is crucial in an era where consumers and investors are increasingly skeptical of corporate practices these days. So, where do accountants fit into this landscape, right? It's not just numbers. So how do we fit into this? Well, accountants play a pivotal role in ensuring the accuracy and transparency of ESG reporting. They're responsible a lot of times for developing and implementing the internal control systems that are used to collect, analyze, and report on this data accurately. Accountants also have to stay up to date on evolving ESG standards and frameworks to guide their organizations through the complexity of the compliance of these types of things. As ESG reporting becomes more integral to corporate strategy, accountants are going to find themselves at this intersection of financial and sustainability, and you're kind of going to have to know a little bit of both. Given the evolving nature of ESG reporting, there is a pressing need for accountants to undergo specialized training and professional development in this area. Because understanding the intricacies of ESG criteria and staying informed about emerging standards and acquiring the skills that you have to navigate that is essential for accountants to effectively contribute to their organization's sustainability initiative. Professional accounting bodies are recognizing this need and are incorporating ESG-related content into their certification programs. As the demand for these ESG initiatives and expertise grows, accountants need to be equipped with the necessary skills that will better position them in the future to drive positive change within their organization. Let's take a closer look at some real-world examples of companies that have successfully integrated ESG reporting into their financial statement. I'm in Memphis, and so I always think about International Paper. They're a huge corporation here in our city. And so they are a standout case that has not only embraced sustainability reporting early on, but they also embedded sustainability into its core business strategy. They've been doing this for a long time. So it was probably easier for them to integrate this into their finances, into their financial reporting. International Paper's commitment to transparency and sustainability has not only attracted social responsible investors, but it has also enhanced its reputation and contributed to its long-term financial success. For example, their 2022 sustainability report was 109 pages long and goes into great detail on their efforts in these ESG areas. So when you're used to producing, 3 financial statements, they could be long, but adding in another 109 page long report, it's no easy feat, and it takes a lot of work, but it is possible. They have, of course, the resources to do this because they're a huge corporation, but highly recommend taking a look at their website. They have all their sustainability information on there, and you can sort of get an idea, at least how to get started. Theirs would be a very in detail example, but they've got everything you would need there, so I highly recommend taking a look at it. In conclusion, the growing importance of ESG reporting in corporate accounting reflects a paradigm shift in how businesses measure success. Okay? Companies are no longer evaluated solely on their financial performance. Investors and stakeholders are demanding more comprehensive assessments that include environmental, social, and governance factors. As businesses navigate the challenges of ESG integration, accountants emerge as key players in ensuring accurate and transparent reporting. Their role in developing internal control systems, staying involved about these standards, and driving professional development within this field is crucial for the success of ESG reporting initiatives in your business. The journey towards a more sustainable and more responsible corporate landscape is ongoing, and ESG reporting is a significant milestone in that trajectory. As we move forward, it's essential for businesses and accountants alike to embrace this, right? And don't turn away from it just because it's new and a little scary, but recognize that sustainability is not just a trend, but it's actually a fundamental aspect of long-term success. Thank you for joining me again on another episode of Accounting Recounted. If you enjoyed today's episode, please subscribe, leave a review, leave a comment, and share with your colleagues. Until next time, this is Amanda Hendren, your host, signing off.